Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is August 29th, getting to the end of the month. And this is the morning Forex Kickstart, where I'm going to take a look at the three currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. We are seeing a move higher in the US dollar in early US session. We'll start by taking a look at the euro versus US dollar. And as you can see on the 4-hour chart, we are moving back below the 200-day moving average. That's a green line in this chart. That level comes in at 1.08068, and as you can see, we're trading near 1.0790, which is near the low for the day. We're also looking to retest this swing area right through here, where we had a number of different swing highs here before then moving above and using that area as a support before moving higher. We returned back to that area in trading last week and actually dipped below it on two separate occasions toward the end of the week, down to lows near 1.0765 each of the time the market bounced off of that level. So not only are we going to look for this swing area between 1.0773 and 1.0789, but down to 1.07653 on the downside. As I said, we are moving into the high of that swing area, and we'll see if the market can break below that level. But what the selling below the 200-day moving average does is it uses that. Traders will now use that level as resistance to lean against, as long as the price remains below the 200-day moving average of 1.08068. This bias remains to the downside. Of course, as you see on this chart, we have been moving above and below it, not only in last week's trading through here, but also in this week's trading. On Monday's trade, we moved below it on a number of different 4-hour bars here, but could not sustain momentum and rotate back to the upside. What we did do on the upside in trading here today was we did find resistance in this swing area between 1.0833 and 1.08485. This area goes back in time to over here and here and here, where we developed this area. We had a little messy situation here before bouncing into the upside here, and then returned to the area right through here, where we reestablished this area as a key either support or resistance level. We returned to that level on this 2 weeks ago, and then last week's trade we traded above and below it, and but we closed the week with the price gapping into or moving into that area. In trading this week and trading today, we moved up to that area and found willing sellers. So we are staying below that level, giving the bias more to the downside. But really, the key targets now for traders in the short term is the 200-day moving average 1.0806 and the swing area down to 1.0773, and then get below the 65 level on the downside, opens the door for further selling pressure. Let's take a look at the dollar versus yen, and we are seeing a rotation to the upside. As you can see here, the last 3 hourly bars have continued to move straight to the upside here. So there is lots of buying here as the market breaks to the upside. Taking a look at the daily chart, you can see the break here. We're into this extreme area through here. We did have a swing area through here going back to the daily chart, where we had different swing highs and then swing lows through here before breaking to the downside through here. And what we're seeing in trading in the month of August was that the price did extend above that on a number of different occasions here, 4 straight trading days. And in trading last week, or toward the end of last week, we did move above that level. And in trading yesterday, we had a very narrow trading range, but remained above that area. And today we're moving away from it. There's a lot of room, as I've mentioned in previous videos, to the next really key resistance area on the daily chart that represents this trend line, where we have these different swing highs forming that trend line. That level comes in at 148.57. We're at 147.33. We're still 120 or so pips away from that level, but on the daily chart, that would be the next key target level to get to. Above that is 149.02, which represents this high right here before moving to the downside through here. So that is the dynamics that we're seeing in the dollar versus yen off of the daily chart, is a break above that swing area. If I put this on a 4-hour chart, what is interesting here to me is that in the month of August, we are heading to the end of the month here. We did have this trend move to the upside here. Regular old line arrow there. This move to the upside, and then what we saw on the correction is a retracement, about 38.2% 38.2% of that August move. We went a little bit below that level at 144.53. The 38.2 comes in at 144.62 before starting its move back higher. And so we are having another leg to the upside here in the, if take a look at this swing area through here, we pretty much held support here, here, and here during, again, this is the 4-hour chart during this week's trading. So we found that base and pushed off of it in trading here today. So the buyers are definitely in control in the dollar versus yen, with lots of upside potential here. 146.74 would be really maybe the closest support ahead of, let's say, you may have the 147 area type. Just natural support at that level might be a support target for the dollar versus yen in trading here today as well. Let's take a look at the sterling versus US dollar, and that is moving to new lows as well as the dollar gets stronger and moving down toward the lows from last week at 125.47. What we did in trading here today was we rebounded up toward the 100-day moving average that comes in at 126.42. Found early sellers against that level, so staying below that level keeps the bears more in control. We did move above this swing area through here where we had a number of different swing lows and swing highs on the daily chart going back in time where it formed this area through here. We returned to it in the month of August and end of July here, and then a few weeks ago we came down to that area. We did break above it on this single bar here and got back above the 100-day moving average. You can see it better through here, but the momentum faded at the end of last week and rotated to the downside and closing below that 100-day moving average. So stay below the 100-day moving average keeps the bears more in control. If I take a look at this from the hourly perspective in trading here today, what was also key on the retracement today was not only do we stay below the 100-day moving average, but we pretty much found sellers against the falling 100-hour moving average. So be aware of that level too at 126.23. We need to get above that level to increase the bullish bias in the sterling versus US dollar. So sellers or buyers of the dollar, sellers of the euro and sterling, buyers of the dollar yen are in control in trading here today. We'll see how that progresses. My name is Greg Minkowski. Good fortune with your trading. Bye-bye now.